Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, June 7th, 2022. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice right here the ES has started the pre-market trading here with a bit of weakness, but we are still within the developing 7-day trading range. You'll notice right here the first 4 days and plus 3 more here that are developing here off to the right. That 7-day developing trading range right now is still in play, and while we have begun the day, or at least the pre-market and overnight trading, with a bit of weakness, we're still well within the range. We're not even at the previous week's low just yet, which is a bit lower right here off of this low at 40.71 So 40.70 is that key level, same level we talked about last week. If we come down here and increase our PivotBoss Advanced ADR indicator to 7, we'll get a new reading right now. Yesterday we had enough energy for about 355 points. Right now we have enough energy at 371 points of potential expansion from this range. So again, will we see expansion now, or will we see expansion in several days? That still remains to be seen, but until we really see a major expansion move from here, we're likely going to continue to stay within the range. We could even drop down a bit more into 40.70 and start to head right back up. In a trading range like this, you tend to see a day up, a day down, a day up and down, back and forth, back and forth. So again, keeping an eye on the bottom of the range. Any rejection here could lead this thing right back up. It wouldn't be surprising to see this thing push back toward 41.50 or back above. Now, whenever we do see expansion, the likely move is going to be to the downside. We've been trending downward most of this year. Right now, this black dotted line is the previous month's close price, and in a downward trend, you tend to see traps above that level, and you tend to see a rotation back down toward new lows. So again, we could be looking at a trap in reverse at some point soon. Now, keep in mind, anytime we're looking at a range like this, the first breakout tends to be a false breakout. Think back here where you had this narrow range. It broke to the upside first, failed, and dropped, and that led to the wave to the downside. So we'll be looking for signs of a failed breakout or a true breakout one way or another, which could give us a big time release of energy north of 350 to 400 points of range. All right, let's take a look here at the NQ. The NQ currently down 1.25% here today, testing the previous week's low right now. Testing the previous week's low. Again, the expectation is not for a full-on breakdown or a breakout from this range just yet. Likely to see further trading range action. A test down into this area could provide a rejection that leads us back up within the range. If we do see a downside break, that opens up the previous year's low price, and it opens up taking back all of the range from that Friday rally. So again, we could be looking at a 12-2 move. That's 220 points from where we currently are. At the moment, this market's been averaging 390 points per day on a 5 and 10 day basis. We're at 180 points. So we still have another 200 plus points to easily see to the downside if we were to see a break at this range. So again, the 12,450, 12,440 zone is very important. That's the previous week's low. If we do start to see a breakdown through that zone, we have another couple hundred points to the downside. Keep in mind, like the ES, in a downtrending market, you tend to see prices above the previous month's close price defended, trap and reverse for another round of weakness. Very similar to what happened here, trap and reverse down. Very similar to what happened here, trap and reverse down. That tends to be the playbook in a downtrending market. Let's take a look now at crude oil. Here's crude oil right here. Taking a look at crude oil, you'll see right now that crude is trading currently lower and inside day at the moment. The previous session was able to hold the 118s. 118 very, very clear right there. And for the most part, any pullback could still be a tremendous buying opportunity for a continuation higher. Now, any breach of that 118 opens up the pivot range below and also the bullish PEMA trigger zone, and that's one thing that we got to consider here, is that anytime prices dropped into that zone, here was the pivot range and the trigger zone, it led to a great bounce back here below the 8-period average and into the zone here. All of these led to tremendous bounces and reverses. So again, even if we were to drop another day to the downside, or perhaps retest the 114 to 115 zone, that could provide an opportunity to look for another rejection similar to this day or this day, and that could provide another opportunity to buy the dip for a continuation higher. So right now, seeing a little bit of a pullback here early in pre-market trading, and any drop into that trigger zone down below could provide a great buying opportunity up ahead. All right, let's take a look now at Bitcoin. Bitcoin down 6.6% here, basically giving back the previous session's gains, and that's going to be par for the course right now. You see a tremendous push up, you see a big rotation down, big push up, big rotation back down, but we're still inside this narrow range that continues to develop over the last many months. Now, right now, this has been a range that is building tremendous energy, and again, if there's a failure to hold that 28K, it opens up a big time move to the downside that takes us back to the teens, perhaps 18 to 15,000. So again, this is going to be a significant area. It doesn't necessarily have to break right this moment. We do have a new FOMC level coming up, not tomorrow, but the next Wednesday next week, and that could be significant here for movement and volatility for the market at large. Looking at ETH futures, this one's also down 6%, again following a bullish day yesterday and back down to 1700. 1700 continues to be that significant area of support. And again, just to re-emphasize here, we're looking at this key range right here. That major key range, we had one move above it, and that was the biggest trap, and reversed back to the bottom of the key range. We've now broken through the bottom and are holding within this box. Again, if it's able to get back above 2200, it opens up a little bit of upside, but full-on downside expansion takes us to the 50% and 100% expansions down below, and the furthest of which would be the 902 levels. That's the 902 half right there. That could be next. So again, 1700 is a big time area of support. It doesn't have to break right away, but at some point, if that level is taken out, we could be looking at a swift decline back toward 1,000 to 900. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.